Good morning. Welcome to Stock Market Today for Tuesday, July 9th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So diving in, U.S. equities closed lower in quiet Monday's trading as investors came back from what was essentially a long holiday weekend. Materials, communication services, and healthcare underperformed. The consumer sectors outperformed, and REITs were the best performing sector. Treasuries were mixed with some curve flattening. The dollar was up against the euro and the yen. Gold finished pretty much unchanged. WTI crude added 30 basis points, but did close off the best levels of the day. The session was mostly uneventful. This week, we will hear from Fed Chair Powell as he gives his semi-annual testimony. As we get to the desk this morning, S&P futures are off 30 basis points to start the day following a weak close in Asia overnight and selling pressure in Europe here this morning. Treasuries are mostly unchanged, and the dollar is mixed against the majors. Crude oil is higher by 60 basis points, and gold is off a similar amount. And as we dive into the chart of the S&P 500, stocks pause after hitting new highs. Support still in the 2,900 to 2,950 zone. We'll see if that holds here today. As I said, futures are under pressure. Resistance is near 3,000, and it's more kind of like psychological. That round number 3,000 is likely to act as resistance. I don't know why. It shouldn't, but it does. RSI confirms the breakout in price, as we said yesterday, holding in bullish ranges. And now what we want to see is the S&P 500 hold the support zone. And we want to see the RSI hold above 40. Ideally, we want to see it hold above 50. But if it holds above 40, that would constitute bullish ranges for the indicator and be our confirmation. So far, so good. Chaikin money flow is neutral. As we said yesterday, we were dancing, we're doing a little tango with the zero line, back and forth, back and forth. All right, we'd love to see that get in gear with the RSI to give us an extra leg of confirmation. But so far, so good. We're holding above support. And as long as the market continues to hold above support, what do we want to do? We want to isolate the leading stocks in leading areas of the market. We want to buy them when they are oversold, and preferably with bullish Chaikin money flow. So what are we talking about in our note today? To Chaikin Analytics clients, stocks take a breather as investors return from the long holiday. Fine, we paused. You can see it. Fed Chair Powell is going to give his semi-annual testimony this week. He'll be in front of Congress. Not much expected. Really, no one really expecting Powell to push back on the market's expectation for at least a 25 basis point cut in July. Now, the June payroll report took a 50 basis point cut off the table as far as I'm concerned, and the market repriced that risk. And that's what we've seen over the past couple of days with yields. REITs and utilities find relative support, which is kind of interesting because rates collapsed and then snapped back. That snapback put pressure on the REITs and utilities, and now they are finding support. So let's see how they trade. Trends there do remain higher. We will take a look. Energy remains an area to avoid. We'll take a look at the EMP group here today. And futures, as I said, do point to a lower open. Power bar perspective, not a lot of shift here. Dow down 45 basis points, 9-4 bulls to bears. S&P 500 down 50 bips, 135 bulls, 63 bears. The NASDAQ underperformed. Apple was down 2%, really weighed on the tech sector. Down 70 basis points for the NASDAQ, 27 bulls, 11 bears. Small caps resume their trend of underperformance. Down 96 basis points, 577 bulls, 333 bears. That ratio took the biggest hit yesterday. Bonds uptick slightly. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Major markets across the board are mixed. Diving into our stock of the day now, and Chaikin Analytics clients, you're going to recognize the stock of the day because the stock of the day was my bullish stock in my note yesterday, and we featured it on this show. But if you receive my note, you'll recognize American Financial Group, AFG, from the insurance group. That's what we've been pounding the table on insurance. AFG closed at 105.29 yesterday, down 44 basis points. Has a very bullish Chaikin Power Gauge rating due to very strong price volume activity, very positive expert activity, attractive financial metrics, and strong earnings performance. So it's nice to see that I am thinking in line with an algorithm. Remember, this is stock of the day for the purposes of this show, auto-generated based on the rating. We walk through the process here now, though. Very bullish stock, strong trend, strong industry group, type of name we want to consider. Obviously, I considered it yesterday. Market and model are in agreement. Dynamic duo in gear. You can see we've been on that bullish rating since April, and it wasn't until late May that the market and model got into agreement. Stock began to outperform, and the intensity of that outperformance is picking up. Stock is neither overbought nor oversold. Chaikin money flow bullish, above the rising long-term trend line, breaking above resistance here. Interesting name to consider on the long side of the portfolio. AFG, American Financial Group. Strong trend, strong industry, leading stock type of name you want to consider owning. Taking a look now at our sector tracker. Movement of the major sectors over the last 5 days. This is kind of interesting to me with that backup in yields following the payroll report. REITs and utilities are at the top of the list over the past 5 days. Real estate, 3.3%. Utilities, 2%. Now, for those of you who have been longtime listeners to this show, for those of you who read my note, you know where I stand on these groups. I've been bullish on them for a while. Trend is higher. Staples also there. So what do we see at the top of the list here? Defensive positioning. Defensive outperforming. REITs, Utes, Staples. Discretionary, comms, and financials in middle of the road. Tech, unchanged for the past 5 days. We want to see tech in gear. Healthcare, industrials, energy, and materials are underperforming over the past 5 days. Materials kind of starting to look interesting to me, but that's mostly a function of gold. Energy continues to be a group to avoid. I feature that in my note today. We're going to look at EMP a little bit later in this show. Continues to be the group to avoid. On the industry side, though, as I said, here's insurance again. The industry focus is also auto-generated, so you can see I'm clearly thinking along the same lines as the algorithm. Insurance services, I featured it in my note yesterday. Over the past 6 months, the group has outperformed the S&P 500 by 3.57%. And the power bar ratio, which measures future potential, is very strong. More bullish stocks than bearish stocks. It's currently ranked number 1 of the 21 subsectors that we track, and it moved up 1 slot over the past week. You can see here, 34 bullish or very bullish stocks in the group for 1 bearish or very bearish stock. Some of those indicative stocks: First American Financial, ticker FAF, Hartford Financial Services, ticker symbol HIG, and American Financial Group, AFG, all have very bullish Chaikin power gauge ratings. What I will say, though, is a lot of these stocks are closer to overbought than they are to oversold. So let's take a look at the group. KIE is the SPDR S&P Insurance ETF. I featured it in my note yesterday. Bullish Chaikin power gauge ETF rating and a strong trend. Right? Similar analysis, right? Bullish, strong trend. Market and model are in agreement. Dynamic duo in gear for this ETF. Been on a bullish rating since mid-April, outperforming since late April, and continuing to outperform. Chaikin money flow intensely positive. I get closer to overbought than to oversold, so probably don't want to chase here, but it's just indicative. This is a theme. We've been bullish this theme. It's playing out above the rising long-term trend line, breaking to new all-time highs on Friday. When we talk about leading industry groups, this is what we're talking about. We've been talking about it for a while, and there's been plenty of opportunities to go into a fund like KIE or another insurance ETF, look at their holdings, and isolate the very bullish stocks and the bullish stocks, and then running them through the process. Are they outperforming the market? If so, are they oversold with bullish money flow? There are your long ideas. Top-down process, right? Easy to kind of dismiss the financials, right? Financials have been an inline performer, kind of back and forth, but it's important to remember it's a big sector. And within the financials, if you just disregarded financials, you've missed insurance. It's why you have to take your analysis a step further. It's why we look at the industry groups. I try to find them and highlight them here. I definitely highlight them in my note to Chaikin Analytics clients each and every day, but that is the process from the top down. Take your analysis a step further. There's more out there than just the sectors. Taking a look at what's trending now, yesterday's S&P 500 gainers and losers. And what I will say, there's not a ton of company-specific news out there right now. You know, the quarter just ended. Earnings are going to start rolling in next week and pick up their pace over the following weeks. So company-specific news, there's kind of a dearth, right? So EIX up 3% yesterday. Didn't really see anything to drive that. Western Digital saw a bit of a rebound after being downgraded last week. Baker Hughes GE, no real news there. Late last week, they put out their rig count numbers, but it didn't look like a catalyst to me. Micron up 2.5%, but I think we're going to have to keep an eye on the energy, the memory stocks today. Some back and forth between Japan and Korea on trade that could impact supply chains in the memory space. So keep an eye on Micron here. Zimmer, sell-side research note out with some positive commentary on hip and knee volumes, sent that stock higher by 2.45%. On the loser side of the board, IPG Photonics, down 5.22%. I didn't see any real news to drive trading there. DaVita. DaVita's a healthcare stock, down 4.74% yesterday. Neutral rating, but what I will say is that healthcare on a relative basis did have a nice rally off their April lows, and it's beginning to fade. TripAdvisor, TRIP, 4.25% to the downside. Alexion, didn't see any real news to drive trading there, down nearly 4%. And AOS came out with an update on their supply chain in China. Maybe some details there as investors parse that commentary, took the stock down by 3.83%. So let's dive in now. What do we say here? I said REITs find relative support, and I could have just as easily used the utilities chart here. It's a similar analysis. Here's XLRE relative to the SPY, real estate sector relative to the S&P 500. Nice, steady uptrend since the market started to have its tantrum back in the fall of last year. Nice, steady uptrend above the rising 200-day moving average. Come back, tried to test it, didn't even get there, and begins to move higher once again. But for me, what's interesting is the RSI. Notice on this pullback, RSI never became oversold. That's a sign of the underlying strength of the relative trend as far as I am concerned. Here it is on an absolute basis, XLRE. Nice, steady uptrend. As I said, I could have just as easily used XLU to show you utilities here. It's a very, very similar setup. For those of you who look at my note, you know Tuesday is relative strength day. You'll see it in there. Chaikin Analytics clients will receive my note. Tech is consolidating, and we want to see tech outperform, and I think it's going to resolve to the upside. I think the odds favor an upside resolution. Why do I say that? Because when we look at tech relative to SPY, first off, we can see this is still kind of an uptrend, right? We're above a rising 200-day moving average by all definitions, an uptrend. But what's interesting to me is that notice on the pullback, RSI again never became oversold. And then it was quickly able to regain the 50 level. And now during this consolidation, it's not breaking below 50. It's holding here. So I think that with a couple positive catalysts, maybe it's earnings season, we'll get some juice back to the upside. Continue to like technology. Think there's going to be opportunities across that sector. I think the group is going to resolve to the upside on a relative basis. And you can see here on an absolute basis, we've held above support, trading near 52-week highs. Continue to avoid the E&P stocks. We talked about energy, and within energy, you can kind of look at E&P, exploration and production, or you can look at services. I could have picked either one. I focused on E&P today. Here's XOP, the SPDR S&P Oil and Gas E&P ETF. It does have a bearish Chaikin Power Gauge ETF rating and a weak trend. Bearish rating, weak trend, area of the market we want to avoid, or potentially go looking for bearish ideas, right? Market and model are in agreement. Look at this. Group has been underperforming the S&P 500 since last October. Continues to underperform. The intensity of underperformance is actually picking up. Intensely bearish Chaikin money flow below a declining long-term trend line. Folks, this is your definition. Remember we talked about insurance, strong industry group, look for long ideas, weak industry group, avoid it, or look for bearish ideas if you trade to that side. Look at a name like Noble, NBL, Noble Energy. Bearish rating, weak trend, weak industry group, type of name you want to avoid, or look for bearish opportunities. Underperforming the market, market and model are in agreement. Overbought and rounding lower, bearish money flow, triggered two, not one, but two sell signals today at Chaikin Analytics. Money flow sell signal and a relative strength sell signal. Here at Chaikin Analytics, I featured it in my note today. Type of name you want to avoid, maybe look at the options market to play for potential downside as long as the stock is below 24.50. So that's going to wrap it up for today. I do want to highlight my market survival guide published every Tuesday. Head over to chaikinanalytics.com/survival-guide for more information. I'll see you tomorrow.